What is going on, guys? Good morning. Hope you're having a great start to your day or end to your day. Definitely an interesting week so far with price action reversing at a key pivot point here on the S&P 500. We have FOMC today, so let's talk about what's on the table. What are the projections for the day? That's going to be the macro backdrop for today. Also, I think price action is likely to be very choppy until then. There are a couple of things that I want to point out ahead of today's session that will hopefully guide you. Currently, the Goldman Sentiment Indicator is, I'd say, just peaking above slightly bullish, but I think that that's going to change by the end of the day. Financial conditions have eased a little bit since the last Fed meeting, but this presents a very interesting case because I think that the market has gotten a little too ahead of itself. So pretty much, I want to say, the past FOMC meetings have always led to price action to the downside, and I think yesterday was another reason for sellers to get involved, mainly because there was pretty much a low skew for volatility. If you realize the VIX has sold off quite a fair bit, right? And with the VIX selling off such a fair bit, this means that pretty much there is very low demand for downside protection. Remember that the VIX is a measure of how much out-the-money options are bought in S&P 500 futures. And so with the VIX this low ahead of the FOMC, it kind of tells me that there are a lot of people that are kind of defenseless at this point. So not really much downside protection bought. Okay, this is reason number one, or article number one, which I want to point out for today. Okay, just deep diving into what the possibility or probabilities are. Obviously, I'm going to give you a summary later, but I want to give you the ingrained, explosive view before we jump into the summary. Now, remember that since volatility, is low, there is a very low demand for downside protection, and it's just the U.S. options market usually at least appears increasingly optimistic about this meeting. And when we see optimism like getting so ahead of itself like this tends to open up the doors for a possible sell-off. Okay. Remember, the market's never going to go the way that we think it's going to go. And so I feel there is a legit reason, or rather, this is being set up to be a really interesting scenario, because we could get a very defenseless sell-off into this meeting. And, it usually does tend to lead in weakening share prices, usually like at the meeting. Because here's the thing, share prices are prone to decline in response to a hawkish surprise. So let's say Fed Powell comes on today and says very hawkishly that they're going to do everything in their power to control interest rates and da. That's going to be a very rude awakening for the market, and that's going to really cause an abrupt sell-off. So that's really something that I'm looking at today. Okay, the price action has been pretty weak for bulls in the past 1 to 2 days so far. Now, let's get into the possible scenarios. So, what's the base case? The base case, or the expected case, is going to be a 75 basis point rate hike. Okay, this is already on the table. This is being priced into the federal funds open market rate. 0.75 basis point rate hike. That would take up the federal funds rate up into, I believe, 4.0 range. 3.25 to 4.0, I believe, is the range. Okay. And this is the base case in which Powell will suggest that hikes may not continue at the present pace, or it's going to depend on more data. If he mentions anything like that, where he's unsure, or he reiterates that inflation is too high, and therefore the Fed needs to continue to raise rates for the unforeseeable future. That's going to basically be the base case, and we are likely to get some kind of a sell-off before a rally. Okay, that's base case. That's expected news. All right. Hawkish. What about hawkish? This is the lower possibility, but still we must entertain this possibility. Is where Powell explicitly says that there is another 75 basis point rate hike in December, because inflation is stubbornly high, and he pretty much forcefully pushes back on the idea of a pivot. He says something like, we may need a higher terminal rate for us to bring inflation down. That would send us way down. Like that would actually be like one of those 2%, 3% drop in the market kind of days. That's the hawkish outcome. Okay, and then there is also the dovish outcome, which is basically like if you look at the probability of distribution, right? The chance of something happening. The two tails are going to be the dovish and the hawkish, and the main distribution in the middle, like the likely outcome, is going to be the 0.75 basis point rate hike, right? So this is the likely outcome, and that's going to be the highest probability. But the dovish case would be where Powell suggests that, okay, we have another 75 basis point rate hike in December, but it may not be necessary. He says something like, we've already pretty much hiked rates to a point where we have done enough front loading of interest rate hikes, and the Fed is nearing its policy on peak inflation, and they will moderately be reactive. That's what the dovish kind of sound will be like. Okay, so obviously right now, if you look at Goldman sentiment, I'm just going to show you some of the research that we received here this morning by Goldman Sachs. They're pricing in the likelihood of a 75 basis point rate hike in November, followed by a 50 basis point in December, and then 25 basis point in March and February. And at the same time, there's a bunch of other things here. I'm gonna just show you guys. So the Goldman is forecasting between 4.5 to about 4.75 basis points. That will be the peak federal funds rate. And also, they obviously put this out as well. Why hike for longer? Reason number one, inflation is likely to remain uncontrollably high for a while. Past data has already presented this as a legit reasoning. You need to understand that when inflation gets this high, it stays high and becomes sticky for a while. So this is just data that they're presenting here. Also, fiscal policy is tightening and is no longer restraining growth that much. And this is also really interesting because you can see, heading down into 2023 and 2024, you can see that fiscal spending on all of the different types of sectors within the government are, starting to dwindle down here. They're really starting to get cut here. Versus the 2021 when money was really cheap and abundant, and the government could borrow it at a very, very cheap rate, right? So that's also something that we have to keep in mind. So that's a few things that I wanted to bring to you guys' attention. I think 75 basis point rate hike on the table, and then it matters what Powell is going to say during the press conference. Okay, that's really, really the important thing here. Now, the interesting thing is yesterday. Remember the JOLT numbers and the economic data that we saw yesterday that caused a little bit of the sell-off. It was actually good data, right? It was good data. It was showing a strengthening labor market, which is actually not what we need right now, because the Fed doesn't want that. That just strengthens the case for more rate hikes, right? And that's just more pain. It's because investors are anxious into the Fed, right? Because that pivot, shift in narrative, it may have come a little bit too far and a little bit too fast. So I really think that, the Fed is going to sound pretty hawkish today. I think Powell's going to pull something like he did during the Jackson Hole meeting and say, hey guys, stop getting your hopes high. Shit's getting real. We need to keep pressing this on. And that's what I really see, because I don't see any other way that this can go. Personally, I because anything else that he says is gonna make the situation worse, right? Now, from a technical standpoint, because we just covered the macro standpoint, or really the fundamental standpoint, let's have a look at both indices, S&P 500 and Nasdaq. So nice rejection off the 39.15, 39 something here, right? Our pivots for the week were actually far higher. One of the pivots were here at 39.50. We didn't even get there. And then 39.20 obviously was a decent pivot too, but we barely clinched that. And then we are reversing back out of 38.61 or 38.60, which is the next pivot here. And I don't think that we're going to really trade much until Powell speaks. So today is really a day you should just take off, honestly, from trading, right? It's not a day you really want to be caught up in the storm. In fact, post FOMC too, it's really pointless to trade. Like, you want to come back tomorrow or the day after when the dust has settled. This is not the days where you need to be taking risk as a retail trader, okay? Let all the big money move in and out and let the chips fall where they may. Then you can make sense of where the direction is going to be. It's okay if you miss the initial move. It doesn't matter, guys. Whether we move down into 3,600 or we move up into 4,150, it doesn't matter. You will come back tomorrow and the day after, and the moves will still be there, okay? You'll still have opportunity. This market will get volatile again, all right? So don't try to bet on either side. It doesn't make sense. And not unless you want to do some kind of a straddle, which honestly it doesn't make sense neither, because volatility is not that high. The VIX is crushed here, right? So remember that volatility is your friend when you want to play both sides. Now the Nasdaq, on the other hand, and I've been mentioning this about the Nasdaq for about 2 weeks or 3 weeks now, we've failed to break out multiple times here. And this is really just the weakness in tech, the mega caps, right? You can look at Apple almost giving up all of its gains. Google fallen into the abyss here after that bear flag, which I pointed out. It's pretty much on its trajectory down to the $85 level, right? Which is the next major support. And Microsoft, with its also continued downward trajectory, it's been pressured and, irritated downward and downward, right? And the bounce level is going to be at 225 roughly. Not to mention Amazon, which again broke another key pivot here, and once again sees another extension down to $90 next, and then 38 after that, and then 73 after that, right? So this could really cause a lot of mayhem. Okay. Obviously everything's looking very grim, and I know that there's a lot of people who are sitting on the bull camp right now, which is completely fine. But I just don't see how the Fed can start to get dovish here. I don't see how they can back off from this. It's just very difficult for them to do so. And they if Powell makes a speech at Jackson Hole saying that he wants to do things to the tune of Bernanke and Volcker, who are two of the most rigorous Fed chairmen ever, then he would be doing himself and his past speech a disservice. And it would put him in a case where people would not trust what he would say in the future if he did and went back on his word like that. So in my opinion, there is no way that the Fed is going to say, okay, guys, you know what? We were just kidding. We're going to calm down for a little bit and we'll press on the gas later again. I just don't see it, okay? And I may be wrong. Trust me, guys, okay? I may be wrong. This is my bias speaking, and I'm putting it on the table because you have to have some kind of a opinion, right? So that's my opinion. All in all, let's have a look at some of the other technicals here. So the VIX down to $26 here, with a little bit of a bullish day, I guess. Just trying to, climb up again at about 2%. Bonds, they try to retrace here and look, still kind of sideways. And then you have DXY, which is the dollar index, kind of floating in between two worlds here, but kind of in a downward channel, I would say. So really, today is a really important day because it's gonna, put some important things forward. Okay, so some of my alerts are going off. Let me just have a look real quick. Market just opened. Airbnb, important one. This is approaching a key pivot. So this is one of the stocks I'll be watching here. You know, if we can get either a break on either side here, I'll be looking to play this. Set an alert back here at $100 and also 102 here to play this one once I see the alerts. And then what was the other one? It was D-Dog. So, oh yeah, D-Dog is the one that has broken down here. So this is a bear flag breakdown so far on D-Dog. And this is a bearish opportunity on D-Dog here. You know, if it loses this level here, the 75.43, I will be taking some D-Dog puts. So I'll be resetting my alert right there. I have a couple of alerts that go off throughout the day to give me entries on the positions that I've already kind of planned. Now, Tesla, look at it. Look at Tesla. Nice megaphone pattern. A break below 220 here sends us down further into you know, 216 first, and then if it loses 216, you know, that opens up a bunch of different supports and resistance here. There's a dual zone at around 214 to 216, so be aware of that. This is an area of both support and resistance, so this is likely to be a very strong level for volume to come in. Obviously, this level which we're getting through right now as well, 220, is going to be a tough level to break. So I'm going to wait for that to happen before anything on Tesla. Yeah, that's all I have for you guys today. I hope that, you know, it was helpful to you. And if anything, keep your eyes closed today. Don't get sucked into trading this market today, because personally, yes, we'll probably sell off into the Fed, and there's going to be a lot of, you know, bias and pressure here. But personally, I don't like betting on speculative things in this environment. It just doesn't make sense to me. So D-Dog going off here. Watch D-Dog closely. Watch Tesla closely. These will be two trades you could probably take if you want to really scalp it. And that's all I have for you guys today. Good luck for FOMC. Please don't apply, you know, stupid amount of risk or try to bet a lotto or something like that. Even worse. Keep your risk off today. It's not the day to go risk on. And with that, I will see you back on Friday with another one of these pre-markets. So peace out and take care. Bye.